Good afternoon from the Shreveport office of Eagle Financial Management Services for the very latest edition of the Jack and Bill Show, live from Shreveport. Well, there's a chill in the air outside, and it's spilled over to the stock market today, Bill. And that's unfortunate with Valentine's Day week this week and my wife's birthday yesterday. No, it's beautiful outside and it's going to warm up for the 3-day weekend. I noticed the markets are closed on Monday for President's Day, but I think most people are actually having to come to work. But they have to catch up from all the time they took off for the pandemic, maybe. But so what happened this week? Well, William, as you know, we've got some jostling back and forth along the Russian-Ukraine border with Belarus threatening to lob some Soviet nukes if they have to, tactical nukes.
Oh, those are old.
They're old?
Soviet nukes.
Oh, okay. Russian. I meant Russian. Well, they're feeling kind of Soviet, maybe.
Yeah.
So, and with that, the S&P 500 had a losing week yesterday. The Dow Jones fell over 600 points, which is the worst day since November, the worst day in 2022. All that said, given the rise in the market last year, through yesterday's close, we were down 7.9% on a total return basis on the S&P 500. Add to that another 0.7% decline today. So we're down, Bill, about 8.6%. That's still not even considered correction territory. I was just noticing the continuance of the rotational shift, through yesterday. The S&P 500 divided in half at the 250th PE ratio gives you, the Vanguard Group does this with their Vanguard Growth Fund, down 13.5% through yesterday and down more, and their Value Fund only down 2%. So the Dodge and Cox Income Fund, a very large stalwart bond fund, down 3.6% year to date. And the Vanguard Total Bond ETF, a ginormous, Jahugic Vanguard managed exchange traded bond fund.
Did you say Jahugic?
Yes.
Okay.
It was down 4% through 4.0% through yesterday. Really, actually not sure what the bond market did today. Bitcoin closing just a shade above 40,000, down about 1% today. I see it going across. NASDAQ market losing more than the S&P, almost twice as much, down 1.23%. West Texas Intermediate, 91.62, kind of flat today. Not really, oil traders not really believing an invasion is imminent. But gold, on the other hand, has been trading up. It's now up about 4% this year. We own some of that in client accounts, breaching the 1900 level, and I think onward past the 2000 mark likely this year. So what do you have for us today, William?
Wesley, what do you have for us? Thank you, Wesley. Yes. I asked Wesley because we have been, all three of us, this past week and next week as well, are engaged in enrollment meetings for employer-sponsored retirement plans. And one of the things that we've been uncovering is that there are participants who have stale retirement plans at previous employers. And Wesley and I had an opportunity to talk to one of these individuals this week, and she just asked the question, can you help me? I've got this old account through my former employer, don't really know much about it, but it's just stale.
Excuse me for 1 second. I have a client texting me right now. I need to tell him he needs to tune in.
Oh. So the simple answer is yes. So it begs the question, should I stay in my old employer sponsored retirement plan or should I roll? And I want to go through some of the pros and the cons because it's not a simple, straightforward answer, although in most cases it is more beneficial for someone to roll out. But let's just say someone stays,
You could answer his question on the show right
or
now.
he could just watch.
Yeah.
That'd be even
Yeah,
better.
there you go. Okay.
So let's say that you have an old 401k account or 403b or what have you, and you no longer work there. What if you leave it there as you've been doing? Well, it's stale. Okay, you are not making any contributions to it because you're no longer work there. There is no employer contribution going into it. You are likely getting account statements infrequently, maybe every 6 months, and it's kind of forgotten. And that's typically the case when we talk to people who have these stale accounts. It's just money that's just there. It's not even thought about. Well, the other downside is that for most of these plans, there is no provision for investment advice. Most of these 401k plans and 403b plans are broker sold, meaning that there's a registered representative of a brokerage firm or a dealer, and because they are held to a lesser than fiduciary standard, there is no provision for them to give investment advice tailored to the participants. So let's just say that you have this stale account and you're looking at how it's invested and you're thinking about leaving it there, but who do you talk to? Well, maybe you can talk to the registered representative whose name is affiliated with that plan, but they're not going to give you tailored investment advice because then they would be in the position of a fiduciary and they don't want that responsibility. Here's the other downside of leaving the money there: limited investment options. Most of these plans offer a limited number of investment options to choose from. It's not like you can just, invest it in whatever you want. No, it's going to be a handful of investment options, typically mutual funds. And for a lot of these plans, the funds that are offered are higher expense funds. And the reason for that is that the higher expense funds are offered to offset some of the plan administrative costs. So a lot of the plan sponsors will, instead of just paying for the cost of running or administering a plan, they will include higher expense ratio funds in the mix. And then all of the parties involved in running the plan, they get compensated from those funds. I mean, that's just how it works. So those are the downsides.
Yeah, I mean, I'd like to pitch into that, Bill, because I've been running into that a lot. And ideally, ultimately, every 401k plan should likely wind up in an individual retirement account.
In most cases, that is good advice. Yes.
Yeah, and most do. And you mentioned 403bs as well. They're even more restrictive. So imagine you could open up a Schwab institutional account here with Eagle Financial, and instead of having, you said, a handful, to be fair, they might have 10 or 15 options, but they're not going to have they're going to have conventional bond funds, which we don't like right now, and they're going to have some good things, but as you mentioned, they're going to have, it's going to be very conventional with very few options, and in some cases exceptionally high fees.
Exactly.
And no advice. And the 403bs are going to be more restrictive, and especially some of these are going to have insurance solutions. So with a Schwab institutional Eagle Financial managed IRA, you have an unlimited amount of investments, and In fact, our current model portfolio right now probably has 17 or 18 different securities in it.
So depending on the size of the account, we will have more or fewer investments, inside of the account that we're using. But when you do, roll over, that's the term. The main thing is that you are preserving the tax deferral. So there is no tax consequence or tax liability when you do a rollover. You're going from one tax deferred vehicle, an employer sponsored retirement plan, to another tax deferred vehicle, an individual retirement account.
That sounds golden to me, Bill.
I love that. And as Jack said, if you hire us and we handle the rollover for you, and you end up with a Charles Schwab IRA, and to be completely transparent, we're not affiliated with Schwab. We're an independent RIA. We choose to recommend Charles Schwab to hold our client accounts. So then you would have a Charles Schwab IRA. We would be actively managing the investments for you, and we would be giving you fiduciary advice. Those are terrific benefits of doing a rollover and hiring Eagle Financial to help you with that. Now, to be fair, there are some special considerations that are applicable to some, not everybody, but we do want to mention these. There are some downsides to doing a rollover. One of these is that you'll likely have more favorable legal protections if heaven forbid you have to go into bankruptcy. There are federal bankruptcy protections that are offered to a 401k plan that are likely not offered to an IRA. We're not giving legal advice, but we're just throwing that out there. You can read up on it on your own. Something else to consider is that if you keep the money in the 401k plan, that 401k plan may have a provision that allows you to take a penalty-free distribution before the minimum retirement age of 59 and a half. So some of these plans will allow you to take money out penalty-free at, say, age 55. Okay, so just want to throw that out there.
You can borrow against it as well.
If the plan, that's right. If the plan provides for loans, then yes, you can take a loan against your 401k.
Which you cannot do with
an IRA. That's exactly right, Jack. So those are the pros and the cons. We think for most people, the pros of doing a rollover way outweigh the cons. And it's not just with employer-sponsored retirement plans. We come across people that have stale annuities or insurance policies, and we come across the same issues. They're not getting advice. There's a limited number of investment options. The investment options have very high expenses. And so we can do a 1035 exchange of an insurance product, such as an annuity, and put it into another annuity. And we have available to us what are called no-load variable annuities. So these are variable annuities issued by very high-quality insurance companies, and they are designed for registered investment advisory firms like us.
We actually use the lowest cost variable annuity that we know of.
That's correct.
Right now.
That's correct. But they're designed for firms like ours. They don't have sales charges. They have the lowest expense investment options inside of them, and they're really just a better product for those investors who need annuities.
That's good. So, that's good. So you've just kind of stumbled across this in the last week, really. Both of us.
Well, we were reminded of it doing these enrollment meetings. We'll be doing more enrollment meetings next week, and so we may have some more opportunities to discuss this topic.
Yeah, and I'd like to say, so if you've got a 401k plan that you've been managing, talked to a gentleman this morning who said that he's watched his go up and down, and he made some changes in there. But now would be a great time to take inventory of that, understand what kind of other options that you might have in terms of individual security selection, which is really pretty much infinite, with us. And it'd be a great time to sit down and review what you're doing with that. Make sure that you're positioned in accordance with your goals and objectives. And we'd welcome a phone call or a visit.
Wesley, do we have a viewer
question from a live viewer?
Okay.
Investing in uranium or discounted CDs, would that be a good route to go?
Oh, that's good.
Follow-up question by the same individual.
Okay.
What about natural gas? What is the upside and downside of that?
That is terrific. And that's the gentleman that was just texting me. And he actually works in law enforcement, which I think is awesome. So Wesley, don't mention breaking the law or anything like that.
You're the one that's normally doing it.
But we know of uranium. We have a uranium play. We actually own it in some accounts through a Canadian firm that owns physical gold, physical uranium, physical silver, and also
platinum, palladium.
Platinum and palladium. Thank you, Bill. I wasn't thinking about that. And we own all of those, and even mining companies. And what we especially like about these closed-end funds is they trade. We buy them on U.S. exchanges. They're very liquid markets. There's a gentleman named Ed Sprott, who's a billionaire, who has a lot of his own money in these things. And so we do. I do like that, just a way to own the physical commodity. And then there are some stocks as well. I would start with the physical commodity, and then I especially like these discounted steepener CDs right now that are tied to inflation. They're deeply discounted, and for us to have a serious conversation about that, it would take a phone call. But there's a formula tied to them, and if long-term rates go higher than short-term rates, that makes them appreciated. It makes the income payout, which is quarterly and adjustable, much more appealing and higher. What about nat gas, Bill? What do you think about that part of the question?
Well, I think natural gas, in my opinion, is a terrific long-term investment. It is if you want to call it, the transitional clean fuel. Our power grid runs off of natural gas. As we see greater and greater adoption of electric vehicles, that's going to put a strain on the power grid. We need more natural gas to fire those power generation plants. I like natural gas. Now, everything I just said and Jack just said about these investments, understand this. We're just expressing views that we have. It's not tailored to anyone, so it's not advice for you necessarily, audience. But so we would have to know more about your situation before rendering that kind of investment.
And I would like to say, nat gas closed yesterday, the spot price at $4.48. I think it's been moving higher most recently because of this cold spell that is, I think it's already hit the East Coast, or it's headed that way. But nat gas prices are up 20.27% so far this year. One way to play that, and we like these basically. We like the oil is basically 91.76. It's up 22% this year after rising significantly last year. So we like both of these commodities, the liquids and the gas. One way to play this that we're doing in pretty much every client account right now is through MLPs, master limited partnerships that gather, process, store, and transport liquids and gas through these massive pipelines. And there's been restrictive policies coming out of Washington that have made both of these commodities go higher, and that's more valuable to these. One of them, for example, is called Energy Transfer, which recently made an acquisition of a company with local appeal. The dividend yield on it is something like 7%. They just reported February 15th. I think that was Tuesday, blowout earnings and blowout revenues. So that's an individual way. One thing against stocks like that is that you have to do a K1 for your taxes, and you you don't normally see the K1 until March. It's a little bit messy, but you can buy these things in an exchange traded fund or an open-end mutual fund, and you don't have to worry about the K1s. If you felt like Russia was going to invade Ukraine, you'd want to own both of these commodities about 45 minutes ago, because that's when the market closed, and it'd be too late if they do it over the weekend.
We have such an abundance of natural gas and oil in this country. We're really blessed to have our own natural resources that, we can get out from underneath the thumb of Middle Eastern powers or Russia. Put yourself in the shoes of Germany and the rest of Western Europe. They are beholden to Russian natural gas supplies. They would love to have what we have right now, and we have so much. We would gladly export liquefied natural gas to our allies in Western Europe so that they wouldn't be under blackmail from Russia.
And I think another point you have to add in there about the long-term dynamics of natural gas pricing worldwide is the power grid, Bill.
Mm-hmm.
Now you think about the U.S. government mandate, European and Japanese mandates to have, I think in the U.S. by 2035, every new car being manufactured must use alternative fuel sources. That means no gasoline. So we don't have sufficient power grids to generate that much electricity, which, I stopped last night at the gas station on Burt Coons out there by the house to get something, and I noticed someone had a Tesla backed into that thing in a charging station. I wouldn't even known that thing was a charging station. It's some blue rectangular thing, and there's two of them there.
Yeah, it's called a charging station.
It didn't say that on it. But anyway, I wonder, man, what happens when you run out of electricity like that? I'm going off on a tangent. That dude must have been waiting inside, sipping on coffee, waiting for his Tesla to charge up. But the point being, we're going to need a whole lot more electricity with that. And
Sure.
I'm not sure there's likely going to need to be a lot more natural gas needed to fuel the power source for these power companies or electric utilities.
Yeah, and there needs to be more investment in the energy sector. Do we have another question?
I come with a loaded question.
Oh boy,
Double barrel.
double barreled, fire.
All right, and I know where this is going to go. And this is why I'm building up to it. I'm ramping it up. So the question is, what about cryptocurrency?
What about it?
So it's in the question of ideal for investment.
Would you care to take that question on, Jay?
Yes, is that a question from a viewer today?
I didn't make it up.
Okay, no kidding. That's good. Okay, here's a follow-up question into their initial question. Is it speculative? Is it just a fad, or is it something real? Okay, I'm going to tell you.
That's a good question.
I'm going to be truthful with you.
I prefer you lie to us, Jack. Tell us the lies.
Okay. I think that if you look at, if you just take Bitcoin, for example, which has been around now for about 13 years, I think in like 10 of the last 11 years, Bitcoin has been the best performing thing out there, bar none. And but we have noticed, we're actually conversing about this at lunchtime today. You could have purchased Bitcoin a year ago and paid roughly 60,000 a coin for it, and today it was going across at like 40,080. The last I looked here, my Fox Business is on a commercial, but I think it's amazing. A year ago, I don't think cryptocurrencies were going across the bottom of the screen on a regular basis. So there's been an enormous proliferation. I like the idea of like Ethereum for blockchain technology. There are thousands of these things that are being mined. And Bill, you would agree with me on this. They're really an idea. There's nothing.
It's an idea.
There's nothing backing these things. However, I think there's been an evolution of more and more of these things because of the value of the promise to pay with fiat, or call it phony currencies, that used to have a gold backing until 1971 in America. We have $1 bills that say $1 silver dollar payable to the bearer on demand. That is not the case anymore. There's no gold or silver, only a promise to pay. And I think there's a reason there for the proliferation with cryptos. I think if you're starting out, Bitcoin would be the one to look at, because I like that it has a finite number of coins, 21 million. Here's a stat for you. There's 43 million millionaires worldwide. Not every millionaire could own a single coin of the 21 million coins. Only less than half of them could. And crypto, El Salvador is a nation, and other nations rapidly adopting this. There are over 4 million crypto wallets in El Salvador, and you can buy things even like a cup of coffee, down there. But it's highly speculative. I'd recommend starting out with 1 or 2% of your net worth. It is debatable whether it's a store of value or a currency,
means of exchange.
I actually think that with Bitcoin, we've kind of gotten past this argument, and it's here to stay. But certainly others, it is.
Well, you used the term speculative, and I agree. There has been speculative behavior driving the price. I mean, we have seen a lot of the same people speculating in cryptocurrencies that have been speculating in meme stocks and things like that. That same kind of behavior dynamic we have seen in the cryptocurrencies. Now, that does not mean that cryptocurrencies are doomed to fail. No, it's just anything can have speculative behavior behind it at points in time. And we've seen that even with companies like Amazon. We've seen speculative behavior over points of time. But it does seem like it's been such an enigma, so new, that people have tried to create investment justifications or narratives to support its rise. And we'll see, but you cannot look at this as you would a common stock or a bond. It's just different.
Absolutely. And I'd add in there, if you own, let's say that your portfolio, you have a portfolio with $100,000, you'd want 1 or 2% maybe in cryptocurrencies, and I would start with Bitcoin, and then $1,000 or $2,000 at most. So those are not traditional investments. And here's the reason why I would be in favor of doing that. It's because Bitcoin's gone up something like more than 1,000 times, I think, since 2011. So if it could continue on that kind of pace, and I think it is, it's captured about 0.5% of the worldwide fiat currency, which is approaching $200 trillion. So Bitcoin is approaching 1 trillion out of 200 trillion is roughly 0.5%, and it's somewhat correlated to the growth. 2 times a month we go up by another $1 trillion in worldwide fiat currency, yet the Bitcoin currency is finite. So that's one way to cut it with a meat axe, try to value, that thing. And it's gone up so fast in such a short period of time that could make sense to have a little bit of it. But we're about things that you can really value for the most part. That wouldn't be something to put 5 or 10 or 20% of your holdings into.
Now,
Yeah.
Wesley, you're on your phone. You must be fielding a viewer question. What do you have?
You wish. As a follow-up, what about the crypto exchanges advertised at the Super Bowl? Is that a way to dip into it?
Oh gosh.
Well, I mean, it is. It's an indirect way, to get exposure to the underlying cryptocurrencies. If you want to do it, go that route. I would say it's a good analogy would be
That's more traditional.
investing in precious metals versus investing in the mining companies that mine the precious metals.
That's a great analogy, William. Yeah, and I would say if you're thinking about owning these things, I mean, we would say, I know what you would say. You'd rather own this, right?
Well, the thing about gold and silver is that, gold and silver has been around forever, and they have actual uses. And gold and silver, are stores of value. They've proven themselves as stores of value. They have been used as means of exchange. Not to say that they can't be augmented with something else like cryptocurrency, but these are the stalwarts.
Yeah, I totally agree. I would have more of this than the cryptos, and then even potentially the mining stocks, the ones that mine this stuff too. That'd be like owning the exchange, as you said, and the exchange would be more traditional because it's going to be valued based upon earnings.
That's correct.
And revenues. So I think we've kind of beat that one to death.
Okay. Well, I'm getting a cue that we're running out of time.
Yes. Okay. Well, that's another. If you have a 401k plan that's just sitting there idle, you don't know what to do with it,
or annuity, or
if you've
403b.
changed companies, if you've recently changed companies and you had a retirement plan there, you can transfer that to a Schwab IRA, and we can help you manage it. And so, Wesley, how come we don't have about a dozen of those questions? Okay. We appreciate you watching. Hope we answered your questions adequately, and join us next week for the next edition of the Jack and Bill Show. Peace out.
Peace out.